Welcome back to Investing Talk Podcast, everyone. Today, we're going to be tackling Intra-Cellular Therapies, ticker symbol ITCI. And, their wild ride
Yeah.
in the stock market.
Yeah.
It's been a wild one. They're focused on treatments for, some pretty complex conditions, neuropsychiatric disorders. This is going to be interesting. You might recall ITCIC, I hit an all-time high on January 10th.
Wow.
Hold on tight. Because things took an even bigger turn after that.
Absolutely. Things can shift so quickly in the market,
Yeah.
especially with companies like this one, kind of pushing the boundaries of the treatments for conditions like schizophrenia and bipolar disorder.
Yeah, and it hit that record high of $93.57 a share.
Not one-year return of 22.17%,
Yeah.
a whopping 46.08% revenue increase year over year. I mean, those are some serious numbers. Yeah, and what's really fascinating is that this impressive growth, it wasn't like a one-off thing. ITCI has consistently been exceeding expectations. But then, just a few days after hitting that all-time high, Johnson & Johnson, or J&J, as most people know them, they dropped a bombshell. They announced that they were acquiring ITCI for a staggering $14.6 billion.
$14.6 billion. That translates to $132 per share. I mean, we're talking a 39% premium over ITCI's closing price before the announcement. I mean, that's what we in the investing world call a power move.
Yeah, and you might be wondering, what does a 39% premium actually mean for investors? Well, it means that J&J believes that ITCI is worth significantly more than its current market value. Essentially, they're paying a hefty price to bring ITCI under their umbrella, which tells you something about their confidence in the company's future.
It's not just about the numbers. It's about the strategy behind them, right?
Yeah, exactly. This was not an impulsive decision by J&J. They're making a strategic play to dominate the neuroscience market. And ITCI, with its focus on developing groundbreaking treatments, is the key to that strategy.
And of course, we can't forget the immediate impact of that acquisition announcement. ITCI stock shot up over 34% on January 13th.
Of course. The market reacted instantly to this news. You see, J&J isn't just interested in ITCI's current success. They're looking at their pipeline, the potential treatments that they have in development. And that's where things get really interesting.
You're talking about their flagship product, CAPLYTA, right? Heard it's making waves. In the treatment of schizophrenia and bipolar disorder.
Yes. CAPLYTA, also known by its chemical name lumateperone, is definitely their current star. It's already FDA approved, which means it's passed the rigorous testing and regulations of the U.S. Food and Drug Administration, which is a big deal in the pharmaceutical world.
But it sounds like they have even more up their sleeve. I heard something about treatments for generalized anxiety disorder and even Alzheimer's-related psychosis. I mean, those are huge areas of unmet medical need.
That's right. ITCI is tackling some of the most challenging conditions out there, and that's what makes them so attractive. To a giant like J&J, they see a company with a proven track record, a pipeline full of potential blockbusters.
And a clear path to future growth. It's a smart investment, even at such a high premium.
So it seems like everyone is betting big on ITCI's future. But before we get into what all of this means for you, our listeners, we need to dig a little deeper into the complexities of this deal.
Right. There's a lot more to this story than just the acquisition itself. For instance, ITCI recently won a major legal battle with Sandoz, which extended the exclusivity of CAPLYTA until 2040. This kind of market protection is incredibly valuable and certainly played a role in J&J's decision. Okay, so we've got this massive acquisition, a promising pipeline of new treatments, and a legal victory. That solidifies their market position. It sounds like ITCI is on a roll.
They certainly are. But even with all of this positive news, we need to consider the bigger picture. We're talking about the biopharmaceutical sector, which is known for its volatility. There are always risks involved.
And with the Federal Reserve being cautious about interest rate cuts, impacting stock valuations across the board. How is ITCI managing to stand out?
Well, let's see what the analysts have to say. Bank of America, for example, has raised its target price for ITCI to $118. They see continued growth potential, even with the acquisition.
That's interesting. So they think ITCI's value will keep climbing, even as part of J&J. What about other analysts? Is everyone on board with this bullish outlook?
Well, OTC Capital is another major player in the analyst world. They maintain an outperform rating on ITCI, though they did lower their price target. to $108. They acknowledge the competitive pressures in the market.
Yeah, it's a tough space to be in, but still believe in ITCI's ability to thrive.
It sounds like a mixed bag, but overall, the sentiment seems positive.
Yes, there's definitely a lot of optimism surrounding ITCI right now. But let's not forget, investing is about making informed decisions, not just following the hype. We need to look at both sides of the coin.
You're absolutely right. So let's shift gears a bit and talk about what all this means. For you, the listener, if you're looking at ITCI as a potential investment, what are the key takeaways from all this news?
That's the million-dollar question, isn't it? Let's break down the potential opportunities and the things you need to be aware of before making any decisions.
Sounds good. Let's start with the positive side. What are some of the reasons investors might be excited about ITCI? Well, the acquisition by J&J is a major signal. It kind of brings ITCI under the wing of a pharmaceutical giant, with massive resources and global reach. I mean, that's a huge advantage for any company, especially one in a competitive field like this.
That's a really good point. It's not just about the money, it's about the infrastructure and expertise that J&J brings to the table. And that could really help ITCI's, accelerate its growth and reach more patients with its treatments.
Exactly. And we can't forget about ITCI's innovative product pipeline. They're not just relying on CAPLYTA. They're actively developing new treatments for a range of mental health conditions. And this is where their focus on neuroscience really shines.
Right, like that drug they're working on for generalized anxiety disorder. That's a huge market with a lot of people who could benefit from new and effective treatment options. What makes ITCI's approach to anxiety unique?
That's a great question. Most current anxiety medications target a specific neurotransmitter in the brain, but ITCI is taking a more holistic approach, looking at multiple pathways involved in anxiety, and this could lead to a treatment that's more effective and has fewer side effects.
So they're not just following the crowd. They're really trying to push the boundaries of what's possible in mental health treatment. That's exciting, but it's also risky, right? Drug development is a long, expensive process, and there's no guarantee of success.
You're absolutely right. There's always the risk that clinical trials could fail or regulatory hurdles could arise or competition could intensify, and these are all factors that investors need to be aware of.
Okay, so it sounds like a balancing act. We've got this incredible potential upside with ITCI's innovative treatments, but there are also inherent risks that come with investing in the biopharmaceutical sector.
Precisely. It's not a simple buy and hold situation. It requires careful consideration and a thorough understanding of the industry and the market dynamics.
So let's say you're a listener who's intrigued by ITCI's story and you're considering adding it to your portfolio. What are some concrete steps you could take to evaluate this investment opportunity?
First, I would recommend digging into ITCI's financial reports. These are publicly available documents that provide a detailed look at the company's revenue, expenses, profits, and overall financial health.
You can find those reports on ITCI's investor relations website, right?
Absolutely. That's a great place to start. Look for trends in their financial performance. Are they growing their revenue consistently? Are their expenses under control? These are key indicators of a company's financial stability.
And while you're there, you can also check out their press releases and presentations. These often provide updates on clinical trials, regulatory approvals, and other important developments.
Exactly. Stay informed about the latest news and announcements from the company. This will help you track their progress and make more informed decisions.
Beyond the company's specific information, it's also important to consider the broader market context. We've talked about the Federal Reserve's cautious approach to interest rate cuts and how that's affecting stock valuations. How can investors factor this into their decision-making process?
It's important to remember that the stock market is cyclical. There are periods of growth and periods of correction. Right now, the market is in a somewhat uncertain phase, with interest rates being a key factor.
So investors need to be prepared for potential volatility.
Exactly. Don't panic if the stock market experiences a dip. It's important to focus on the long-term fundamentals of the companies you're invested in.
And that brings us back to ITC. Despite the market uncertainty, they seem to be on solid footing.
They are. Their recent financial reports show a solid track record of revenue growth and a healthy cash position. And now, with J&J's backing, they have even more financial stability.
That's reassuring for investors who are looking for a company with a strong foundation. But let's circle back to the risks. What are some of the things that could potentially derail ITCI's success?
Well, as with any biopharmaceutical company, there's always the risk that clinical trials could fail. Drug development is a long and expensive process, and there are no guarantees.
Right. Even the most promising drugs can hit unexpected roadblocks during clinical trials.
Exactly. And that could lead to setbacks for ITCI and potentially impact their stock price. Another risk to consider is competition. The market for neuropsychiatric treatments is crowded, and there are many other companies vying for market share.
And so those companies are much larger and more established than ITCI, even with J&J's backing.
That's true. So ITCI will need to continue to innovate and differentiate itself to stay ahead of the curve. And of course, there's always the risk of regulatory hurdles. The FDA has strict approval processes for new drugs, and any delays or rejections could significantly impact ITCI's plans.
Okay, so it seems like there are a lot of moving parts here. Investors need to weigh the potential rewards against the potential risks.
Precisely.
Yeah.
It's not a black and white situation. It requires careful analysis, research, and a willingness to stay informed about the company and the industry.
You've given our listeners a lot to think about, but before we wrap up, I'm curious about your personal take on ITCII. Is it a buy, a hold, or a sell?
That's a tough question. And I can't really offer specific investing advice. But what I can say is, ITCI is a company with significant potential. The acquisition by J&J definitely marks a major turning point.
Yeah.
And their focus on neuropsychiatric disorders, puts them in a market that's only going to grow. But investors need to be aware of the risks involved and really do their homework before jumping in.
Yeah, you're absolutely right. We've talked a lot about the rewards, but
Yeah.
it's so crucial to acknowledge those risks. Inherent in the biopharmaceutical sector, clinical trials can be unpredictable. Regulatory hurdles can pop up.
Yeah.
Competition is always fierce.
Exactly. Due diligence is key.
Oh.
That means researching the company's financials, understanding their drug development pipeline, and, keeping an eye on the competitive landscape. And don't forget about those broader economic factors that could influence the market. We're still in a period of uncertainty with interest rates and inflation, so it's just essential to factor those in to your investment decisions.
Yeah. You've given us a lot to consider, but before we wrap up, I kind of want to shift gears for a moment and talk about the human element of all of this. ITCI is developing treatments for serious mental health conditions that affect millions of people worldwide. If their treatments are successful, if they can help people live better lives, that's a huge impact. I guess goes beyond just the financial bottom line.
Yeah, that's a really powerful perspective. Sometimes I think we get so caught up in the numbers that we kind of forget about the real-world implications of these investments.
That's a
potential to alleviate suffering and improve people's quality of life. That's a compelling reason to pay attention to companies like ITCI.
It's a great reminder that investing isn't just about making money. It's also about supporting innovation and progress in areas that matter to us.
So,
as you consider ITCI as a potential investment, I really encourage you to think about the bigger picture. What kind of future do you want to see? What companies are working to make that future a reality?
Yeah, those are great questions to ask yourself, ultimately. Investing is about aligning your financial decisions with your values and your vision for the future.
Well said. So to recap, ITCI is definitely a company to watch, especially in light of this massive acquisition by J&J. There are strong indicators of future growth. But as with any investment, it's just crucial to proceed with caution. Do your research, understand the risks, and consider your own investment goals and risk tolerance before making any decisions.
And always remember, to diversify your portfolio, don't put all your eggs in one basket. Spread your investments across different companies and industries to really manage your risk.
Great advice. What do you think about this massive deal? Is ITCI a buy, hold, or sell? Let us know in the comments. And if you enjoyed this episode of Investing Talk Podcast, please subscribe to our channel, share it with your friends, and leave us a comment with your thoughts and questions. We love hearing from you. Until next time.